Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, thanks to Prime XBT for sponsoring today's video. If you use our links down in the description, you can get up to a $7,000 deposit bonus. And if you use our other link in the description, you can also get 25% off trading fees. On Prime, you get access to not only trading cryptocurrencies, but you can also trade Forex, commodities, and stock indices as well. So for more information, check the link in the description. Right, first and foremost, gang, remember, nothing discussed today is financial advice. This is just my views on the market, and it's for educational purposes only. Now that's out of the way, we're going to start by looking at what we were talking about last week. So last week, we were down on the lower time frames, and last week we just managed to get up here, which at the time, if you remember, in fact, let's make this full screen, shall we? If you remember, we'd just come in to the golden pocket, first tap, and what we were looking for there is either a rejection here and a pullback. And here's a quick screenshot from last week's video. We just come up into this golden pocket, and first and foremost, if we were going to get a rejection here, I was looking back down at this value area high of this previous consolidation that we were in, and lo and behold, this is what happened. Again, this is just the power of using volume profiles. We can see, look, we just slightly front run it. It's all right, it's not perfect, but then again, it's trading, it's not an exact science, is it? But yeah, we got the pullback, then we got another push up, we took out these early shorts, swing fairly pattern, back down, and then obviously last night's fun with the FOMC, which we'll get into in a minute. So let's zoom out a little bit and let's take a look what's going on. Monthly, still sideways. Obviously macro downtrend. Overall, we're still going sideways. Obviously we've got a new monthly now. This monthly finally managed to close above the last monthly, but you know, does that mean that we're going to go to the moon? Or does it mean that we're going to drop? It doesn't give us anything. What it means is we're still in this sideways freaking range. Weekly, you know, exactly the same. We're starting to get this curling up still. If we take out this high, and then potentially we can start looking at changing structure on the weekly. But for now, you know, as it stands, could this just be another lower high, looking for another lower low? We will have to wait and see. Daily, yeah. Still maintaining structure for the time being. Obviously we have closed lower, taken out this low, but right now to me this is not a death sentence. You know, we just got a sideways small range going on here. All right, okay, so I want to get into a bit of a rant first and foremost, which is obviously a surprise if you don't know me, but I'm sick and tired of influencers teaching people how to trade the wrong way. And, you know, last night's FOMC is no different. So, you know, what happened last night at FOMC? Well, this happened. Look at this. Big fucking mess. Big fucking mess. And, you know, we've got influencers drawing the standard pretty patterns. In fact, let's zoom into the 1 hour. You know, and come and guess what the pattern was. And if anyone follows us on Twitter, then you'll know what we're talking about. And it was quite simply this here. In fact, let's turn off magnet tool so we can get it clear. So we had this here, and this is what the influencers were telling you to trade. Yep, triangle, looks like a triangle. Don't like all this void space here from Elliott Wave perspective, but you know, I don't like it. But then again, I'm not a pattern trader. And pattern trading is obviously what these influencers lure you into trading with, and this is how, you know, they tell you that you can make really good money and really good returns with patterns. And we've talked about this a few times on the channel, and I talk about this a lot in our trading course. Is, you know, patterns like this are just perfect for luring in bad traders or breakout traders, and that's all they're there for. It's quite simply, it's just to lure in some liquidity. So what happened here? Well, obviously, just before the event happened, obviously we're going to break to the downside. So any breakout traders, oh look, we've broken the bottom. Short. Oh, I've stopped out. Short just before the event. Then we had a pump. Long. Oh, I've stopped out. Long again. Up here. It's going to go to the moon. You know, the target, what do? They do these crazy things, don't they? Here we go. They go, oh, the target is going to be 21.6k. That's the breakout target. So trade the breakout, take profit here, and then look what happens. It gets nowhere near the freaking target, and then it reverses and stops you out. And you know, unless you're practicing safe risk management and you understand where to put your stop loss and you understand how to work out your risk based on any given trade, then fair enough. You know, you might have been stopped out and it wasn't too much of a bad loss. But I'd put money on the fact that most of these people that watch these influencers are not understanding risk management, because these influencers don't understand risk management because they're not playing with their own money. They're playing with money that they get from referral links from other exchanges or from shilling you shit coins, and they're getting paid a big kickback on it. So rather than trying to trade these kind of patterns, you know, mentioning no names, we've disguised his name because obviously we don't want to upset the people. But you know, this is what they're doing. You know, they're drawing these triangles, and look, all these taps, this support and this resistance, yeah, you know. And then they're live streaming at the time during the FOMC meeting, and they're taking the trade themselves. They're taking the breakout trade themselves. And how many more people are piling into that trade because they're watching this idiot trade a triangle breakout? So obviously we retweeted it. You know, the drill gang. You know, and anyone that's learned along with us in the Spitfire group knows when you start to see the idiots online posting shit like this, then you're looking for a counter trade. Quite simple. If it breaks to the low first, you're looking to counter trade it the opposite way. If it breaks to the high first, you're looking to counter trade it the other way. So as we were saying in the Discord at the time, here's our Twitter, and this was what we were saying. So quite simply, we were saying in the Discord, I like the region. And I also like the range POC at 20.7, or the POC, point of control. Okay, at that point of control, we also had a naked session point of control. And I do like the fact that we've broken out, wink wink, nudge nudge, of the triangle. And this is what I was saying. And there's the setup, nice and easy. We had the range point of control, we had a golden pocket, we also had a naked session point of control up here, so we had 3 bits of confluence here to take a trade. Quite simply, break out of the value area high, then I'll be looking for a higher price to take out these highs, more likely. So therefore, quite simple invalidation, enter your trade, the FOMC, pump into the level, take the trade, and we'll trade it back down to the range lows. Quite simply. So, to draw this on the chart, all we need is a simple volume profile at the time. Here it is. We take a fib pull from the high to the low at the time, which obviously would spike down first, so therefore the low was here, this wick here. This is what happened initially. Zoom to the 15 minutes, make it a little bit more obvious for you. Obviously we spiked down first, so this fib pull here is using this wick here, because this is what was happening in real time. Came up, hit the golden pocket, the point of control, the naked session point of control that was in here too, get a nice rejection, and then we bounce back down. Because rather than looking at this as a triangle pattern, which amateur or beginner traders look at, again, it's because, you know, they make it look so easy. You know, trade this simple pattern, trade this simple head and shoulders. But quite frankly, the hit rate is so low, it's unreal. You know, it's simple. We've just got a sideways range. We've got a sideways range. Now what's happening locally here? Well, are we getting back into value? If we're getting back into value, then we'll come and look for a further push up, maybe towards the point of control again, maybe the value area high. Or is this just a deviation back into value, and then we're going to deviate back down and come down lower? Well, we don't know. But for the time being, we trade this range until it breaks. So stop listening to these influencers that are posting these patterns, because all they're doing is luring you in. Remember, they don't make money from trading. They make money from sponsored shitcoin adverts and telling you that whatever shitcoin's trending at the moment is going to the moon. That's what they get paid from. They don't make their money from trading. It's as simple as that. Okay? Right, that's the rant over. So, let's take a look. What's going on? What can go on? Well, first and foremost, we'll do our usual trick. We'll throw on a volume profile of the whole range. Obviously, since the June lows, the whole range. So we're still range bound. Okay, we've not broken to the top side. We've not broken down. Okay, we're just going sideways. So it's a level to level environment, like we always say. So what can happen from here? Well, as we said last time, if price does turn around and start coming up, well, first and foremost, this whole region here still looks good for either A, take profit on longs that you may be in longs from lower down, and B, if you get a good reaction within this zone, then it's potentially a good zone to look for new shorts. Now, is this taking new shorts and looking for 10k? No, this is new shorts trading the range that we're in, because that's what's happening. Okay, if we get above this, then as we've said a few times, we've got this volume to contend with, which is obviously all this structure here. You know, if you want to break this down into another mini range, then we can do. I'm going to look at it like this. Well, look at this. You get above this high here, you get acceptance into this old value range here, then you trade in that, and you can be looking up towards the point of control again. Get above the point of control, we can get up to the point of control, up to the value area high. Get above that, then first and foremost, I'll be looking to take out these highs. If price does take out these highs, let's just draw on a range so we can see this crystal clear. If price does manage to somehow get above all here, then first and foremost, take these highs, then you've got a trigger short, and then you are playing the outer range, but still paying attention to the value range. You know, does this short mean that you can pull it all the way back down to the June lows? Not necessarily. You know, this short might come down and might not get back acceptance back into the old value range, so it might turn around here. If it does get acceptance, then you trade it lower towards the point of control. Okay, simple, level to level. We're not getting greedy on any of this. Let's bring that back on. Right, so that's options to the upside. Obviously, we've said a few times, you get it back above here, then you're looking into this consolidation here. You know, and this is significant resistance at the moment, because obviously this ties in with the macro range. You know, the range that's roughly from 29k up to 69k. So if price does come back up here, then I'll be looking at roughly around 29k as your first point of call. Get back into this value, and you know, maybe we're looking at high prices. Okay, so that's the upside. To the downside, what we're looking at for longs. Well, if price does get acceptance back into this range, let's just get rid of some of this. If price does drop back down and gets acceptance back into this range with quite a clear SR flip, then we're trading this range. And ultimately, I'll be looking down towards this point of control. This point of control doesn't hold. Value area low. Obviously, this local value area low and this point of control lines up with the macro value area low and point of control. If that fails to hold, then I'm looking at June lows. And like we've been saying a fair few times, potentially a swing failure pattern. Or if no swing failure pattern happens, then quite simply, we just go lower. Okay, and if you guys want to see our lower targets, then check out some of our older videos, because we've covered those before. Okay, so the plan's very similar to last week. Very similar to last week. Obviously, we were up here last week where we were talking about coming down to this value area high, which happened. We got a decent bounce. You know, we've come back down to this value area high here. Again, we've not taken these lows, but we have had a bounce so far. So can this bounce continue? Well, let's wait and see. Let's wait and see. You know, so far we've just got several mini ranges going on, and all we're doing is we're trading each one until one of them gives way. And then when one of them's give way, then we'll wait for the new range to form, and then we'll trade that range. So simple as that. Yeah, nothing overly complex. From the low to the high, Would you look at that? That's magic. Around the point of control, you've got a golden pocket. So hence why, if we get acceptance into here, then I'll be looking down at this golden pocket around this point of control. Okay? Does it get a bounce there and moon? Who knows? It could get a bounce here, maybe bounce back up to value very high, then drop, or continue. Let's wait and see. We just trade level to level. We're not in greedy mode yet. You know, the bull market's for greedy mode. A bear market's for sensible trading, smart trading, which is why anyone that made all the money in the bull market has probably given it all back by now, because they don't understand how to trade sideways price action. Now, if you do want to learn how to trade sideways price action, then the best thing you can do is come on over to our website, links down in the description, spitfiretraders.com. Come join our free Discord. There's plenty of resources in our free Discord that can actually turn you from a clown trader like this guy into someone that understands how to trade. Okay? So, first and foremost, check out our free Discord. If you want to take your learning to the next level and understand how we trade, then come and check our Copilot section out. This gives you access to a private Discord. It gives you access to nearly 60 hours worth of educational video content, including a very large section on how to counter trade influencers. A very large section on how to counter trade influencers. So if you want to learn how to do that, come check us out. You know, £50, 60 hours worth of video content and access to the private Discord. It's, you know, it's not a bad deal. It's less than £1 a video, let's be honest. You know, that's that. Once again, thanks to Prime XBT for sponsoring today's stream. You know, if you do want to check them out and learn more, click the link down below. And until next time, gang, that'll do. As you were, bye-bye.